please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Have Nigel with us. Nigel, any first thoughts and reaction on the operational performance of India Cement?
You know, the operational performance is not looking as good. Clearly, if you just look at the margin number, it's coming at around 11.3%. That compares with around 13%. But remember, this quarter wasn't expected to be that great a number in terms of the operational performance. We're looking at a recovery in terms of South India. Now, the net profit is looking much better for a few reasons out here. One is that, in fact, there's a tax credit. So that's one reason why our number was around 23 crores approximately. The number that they have come up with is around 35 crores, but that's because 11 crores is the tax credit. The important number, Mangalam, that I'm looking at is the finance cost. Right. Now, that's come down drastically on a sequential as well as on a year-on-year basis. But we need to keep an eye out whether or not there is a debt repayment.
There hasn't been a debt repayment, Nigel. Yes. So I'm looking at the long-term liabilities of the company, long-term borrowings. They have actually increased from 2,450 crores to 2,900 crores. And the short-term liabilities have reduced from 360 crores to 155. In essence, total debt has increased. So do you think they've refinanced it? Or
yeah, we'll have to wait for clarity in terms of debt repayment, if at all there was any debt repayment, because the finance cost has come down by quite a big margin. Right. If you could just help me out with those numbers.
82 crores a year ago, it's come down to 72 crores.
Yeah, correct. Yep. So, you know, so that's one number. Otherwise, the operational performance wasn't expected to be that great. If you compare it with our poll, in fact, the margin is a bit of a miss. I've got some more details as well, and I'll just request our ticker team to put some of these details out. I do have the sales volumes numbers. Now, that's coming at around 3.09 million tons. So that is more or less in line with what we were working with. We were working with 3.15 million tons. So that's, you know, more or less 3.1 to around 3.15 million tons. That's the reason we were expecting a bit of a growth on the top line. So let's get that number down. 3.1 million tons. That compares with around 2.86 million tons on a year-on-year basis. So the sales volumes numbers, they're more or less in line with what we're working with. Margins are a bit of a miss, but the key important factor that we should be looking out to is the finance cost. You know, what happened in terms of that finance cost? Is there a one-off? Is there some debt repayment? Because if there is debt repayment, that will be a whole new trigger for the stock. We'll have to keep an eye on that front. Otherwise, the only reason the net profit number has beat is because of that tax credit, and also the finance cost has come in lower. Sales volumes number 3.1 million tons, and we were expecting 3.15 million tons. Waiting by for further clarity.